Hello, everyone. Good morning. Welcome to today's Forex Morning Mastery as we prepare for the new week. And I'm just very excited to be here with you as we look forward to what I will call a promising week. Hope you all had a wonderful weekend out there. And of course, let's get prepared for today. So, we are going to be monitoring three financial instruments as always. And in fact, while I was doing my analysis during the weekend, I didn't want to trade the US oil due to the indecisive nature of what I saw in the 4 hours time frame. We are going to be going into that, and I decided to trade only two assets, which is the USDJPY and the XAUUSD. But looking at the US oil this morning, I began to notice some familiar setups on the 1 hour time frame especially, and that is prompting me to do something on that asset today. So we are going to be including the USOILSPOT on our watch list for this week. And before we go into the business for today, I would like to welcome those who are joining us for the first time. You're highly welcome on board. Very excited to have you here with us this morning. My own name is Sheriff Daramola, and for the next 30 to 40 minutes, I'm going to be going through the financial market together with you, sharing a deep insight into this market I am personally looking at for the week. I usually monitor between 3 to 4 financial instruments every week, but I publicly share these three instruments, which includes the USDJPY, the XAUUSD, and of course the US crude oil. So we are going to be looking into all of these assets this morning. We're going to be doing a top-down analysis. We're also going to be taking into account the fundamental factors that are influencing this market so that we can have adequate information that will allow us strategically position ourselves for the next move. So that is basically what we do here. It's important to also note that this is not a signal service platform, but I will call it an educational avenue where we come together to have a better understanding of the market sentiment in each of these instruments. So if you are planning to trade the US crude oil, the USDJPY, and of course the XAUUSD, stay tuned in as you do not want to miss out on these ideas we will be deliberating on today. And I also encourage you to actively engage in the comment section. Ask me questions. If you need clarifications, if you need some understanding around something about the financial market, feel free to let me know in the comment section. I'm here and willing to be of help in that regard. I see you, Jonah Aruna. Good morning. How are you doing today? Glad to have you around here. I missed you at the Forex market prep session yesterday. I hope all is well. And I also saw your comment too, and I did responded to that comment on the Forex market prep live stream. I hope you saw it, and I wish you the best of luck this week. So with that said here, let's dive right into the business for today. And of course, the first thing we normally do, of course, is to try to look into the US dollar market dynamic. It is very, very important for us. For those of you who have been with me for a while, you know how important this is. The US dollar is an asset, is an instrument that has a lot to do with all of these assets we are monitoring. So there's no way you want to be trading the Japanese yen, the US crude oil, and of course the gold commodity without really having a deep understanding around the sentiment in the US dollar market dynamic. So that is basically why we usually start off our session by running through what is going on in the US dollar. So Looking at the US dollar index. So this is the US dollar index for this week. I have a new structure entirely. And if you look at the chart here, of course, this is the 4 hours time frame. And for those of you who are not familiar with the US dollar index, well, this is a chart that gives us an overview of the performance of the US dollar against the major currency assets. So whatever we see here tells us how the US dollar has been performing within a specific period of time. So on the 4 hours time frame, which you are seeing on my screen right now, you will see that since last week, let's say throughout last week, or let me say the first half of last week, we saw that the US dollar did some decline. So as at last week, prior to the beginning of last week, price was oscillating around the $98.80 level. Remember, we had that consolidation going on around that area prior to the beginning of last week. And during the first 3 days of last week, I mean Monday, Tuesday, and Wednesday, of course, we saw price drop significantly all the way into the $97.10 level. And on Thursday, we begin to see a rebound in the US dollars. We saw price rise back up to close somewhere right below the $97.80 level. And of course, the $97.80 level became my key level for this week. For those of you who were part of the Forex Market Prep, remember we discussed this and we said we were at a critical juncture, as we can see, the $97.80 level, and of course the resistant line of that descending channel are sharing a confluence. And we said we will be looking forward to see how the market is going to be reacting to that confluence this morning to decide whether the US dollar is going to rise or not. And of course, look at what had happened in the last 8 hours or so. Price action had appeared to gain some traction as we saw an engulfing bullish candle breaking out of both the resistant line of the descending channel and that key level identified at the $97.80 level. And it appears we're beginning to see a platform that may likely push the US dollar further to the upside. Now, last week, we saw that decline, and I guess one of the major reasons the decline happened was basically because of profit-taking activities. Remember, the last 3 to 4 weeks, the US dollar has been gaining momentum, right? The last 2-3 weeks, of course. And we saw a little bit of culmination around the $98.80 level as profit-taking activities began at the beginning of last week. So traders took some profit at the start of the week, leading to that bull pullback we saw, bringing price into the support line of the descending channel identified here. And of course, we saw some cautious sentiment ahead of major news last week. Traders sat on the sidelines waiting for clues from the Fed. Of course, the upcoming NFP, which is coming up this Friday, and tariff update as well. And this uncertainty made some reduced US dollar exposure. Now, with the new week beginning right now, it appears that the dollar is finding its footing, right? It's finding its footing, and we may likely see this whole area become a platform for new highs. Now, what could be the positive drivers that may likely influence the US dollar ahead of the major event we are looking at this week? In fact, this week is jam-packed with a bunch of high impactful events. Let's quickly look at that first. So if you look at what we have here, the major events are the one highlighted in red color. So the first major event is not coming until Wednesday, July 30th, and that is the ADP employment change. So this gives us an insight into the performance of the privately employed employees in the United States, and this also gives us an insight into consumer spending and its stimulative economic growth in the United States. And if this data comes in higher than market had expected, we may likely see the US dollar rise, as a higher figure, a higher data shows that the labor sector is resilient. And if we look at what the market expectations are, they're expecting a 75,000 growth for the month of July, which is way above the previous, that is the month of June's data, which was a deficit of 33,000. So if the data comes in just as expected or even beyond what we have here, we may see renewed demand for the US dollar. Then on Wednesday as well, we have the Fed interest rate decision, which is coming up too as well. And the question is, will the Fed hike, hold, or hint at interest rate cuts during this session? That is on Wednesday, 6 p.m. UTC, and that's about 7 p.m. local time. But the consensus still remains that Fed will leave interest rate unchanged. They've been talking about this week in, week out, despite political pressure from the presidency. So that is that one. Then we also have the non-farm payroll report coming on Friday. Another major event. Of course, this is a very big job report. If job growth is strong, if the data comes in strong, the dollar could also spike, and weak numbers might pull the dollar to the downside. And then we also have the tariff deadline, which is on the 1st of August, and a new round of tariff is expected on Chinese imports, which may kick off. And if this is confirmed, it could spark a risk aversion, which may either boost the US dollar as a safe haven asset or even hurt it if it dampens global growth expectations. So these are major events we are looking forward to. And then we also have the ISM manufacturing PMI, which of course will be giving us an insight into the performance of, or let me say, the health of the US economy. A drop could stir fears of slowdown in the US economy, which might be a red flag for investors in the US dollar. So these are very, very important events that everyone in the market is looking forward to. And one thing I've come to understand with my little experience in the market, is that the anticipation of this major event usually influence the sentiment in the market, and the sentiment can be deciphered if we look at the technical structure price action is evolving to on the chart. So as this anticipation draws near, there is this evolution of price action into a particular technical structure pattern of formation, which can give us an insight into what majority of market participants are thinking ahead of that event. And it is well known that major key players in the market usually have insiders in these departments that are releasing this information. So they have a first-hand knowledge of what is likely going to come out. And because of this first-hand knowledge, they gradually build a position ahead of the event. And this gradual repositioning ahead of the event comes in form of technical structures that we want to be looking out for on our chart. Now, like I was saying, the dollar at the moment is still looking very strong. Of course, we can see that beautiful engulfing candle breaking out of both the resistance line of the descending channel and the $97.80 level. We saw stronger than expected jobless claim report from last week, showing that fewer people fight for unemployment benefits in the United States. And this signals a strong US job market, which investors sees as a sign that the economy is still holding up at the moment. And this is a very good news for the US dollar. And we also saw during the course of the last 2 weeks that some Fed officials are hinting that they are not done with rate hikes yet, and that gave the dollar a little bit of lift. And the idea that rate cuts is still on the table is dimming every day as the tariff uncertainty lingers in the market. So for me, I still strongly think that the US dollar has a strong footing at this point in time, and we need to see how we can capitalize on this opportunity. So with this information we have here, let's delve into the chart and let's see how the market is playing out at the moment and how the US dollar is influencing these assets we are talking about. So going into the chart right now, the first asset we are going to be taking on, of course, is going to be the USOILSPOT. And of course, I will explain to you what I am seeing on this chart, what I saw on this chart when I was analyzing this market. So what you see here is the 4 hours time frame of the USOILSPOT, and you will see a unique feature here. In the last 5, 6, 7 weeks, you would have noticed that the price of the US crude oil had remained confined within a range-bound structure. In fact, a $4 range-bound structure, a very tight one if you would ask me. This is it right here. We have the resistance line at the $68 level, and we have the support line here at the $64 area. And what does this tell us? It tells us that the market is currently in an indecisive phase. Market don't know if they want to hold on to the US crude oil or they want to drop it. So as a result of this, we are seeing buyers and sellers struggle to gain some traction from this particular area. And if we look at the fundamentals, oil appears to be bouncing back currently, but we're still watching both demand and supply clues closely to decide whether it is time for buyers to gain momentum or sellers to gain traction. But from what I see this morning, it appears that buyers are beginning to come in somehow, and this could be attributed to the new deal between the United States and the European Union, which has ended months of tension, calming global market at the same time, and of course boosting the optimism for trade and oil demand. That is one factor I think will be one of the major reasons that is influencing the current demand we saw here. During the Asian session, it has been more of buy from that $65 area. Then the US and China trade talk situation, which is still coming up. These countries are the two biggest consumers of crude oil, and they are expected to extend their trades truce, or let me say trade favor, I don't know how to put that, which supports hope for a stable global oil demand. So that is still very tentative at the moment. August 1st is a day everyone is looking forward to. We don't know what the outcome is going to be like. So this is also bringing in some uncertainty, but there is still some level of hope right there that something positive is going to come up. Then the US is also reportedly easing tech restriction on China and signaling smoother relations and helping to fuel demand consumption. So I still strongly think that the path of least resistance for the US crude oil seems to be upside, at least in the meantime. And one of the things that could also support this this idea from a technical standpoint is the fact that price still remains above that $65 area, which happens to be the most expensive price level within that demand zone. So you can see that's a $65 area, and look at the last time price we had a big massive move from that $65 level. That was sometime in June, going to this area before it came back into this particular area. And look at this, sellers have been finding it difficult to break through that $65 area, making it a robust demand zone ahead of this week. So we might likely see a $4 movement to the $68 area, or even breaking it to the upside. Now, in as much as the momentum is looking bullish at the moment, coupled with the fundamental factors we talked about, we cannot ignore the potentials that sellers can also come in. You know how we do it in this community. We try to strike a balance between bullish and bearish expectations. So we are much more grounded in our approach. So while we're looking at the possibilities of buyers coming in, we also take into account the potentials that sellers may also come into play. For instance, we have fundamental factors that also support the idea that sellers may also come in, like for instance, OPEC Plus considering increasing, it's not even considering, they have mapped out plans to increase oil output. So oil producing countries like Saudi Arabia, Russia, and the OPEC Plus members in general are not planning to cut back supply at the moment, and are sticking to plans to raise output by 548,000 barrels per day in August. And this could put a cap on oil prices if demand doesn't rise fast enough. So that is something we also need to take into account of. And if we look at the recent drop in oil prices despite recovery in the market, what are the chances that sellers could come into this market? Well, to help me navigate this market this week, my key level is going to be at the $65 area, and as long as price remains above that $65 level, I will continue to look out for patterns and structures that support buying ideas. And if you look at the bottom of my screen, you'll see that I already are taking a buy position on the US crude oil with the hopes that the momentum will continue to the upside. Now, if I'm going to consider selling, I will definitely look at somewhere below the $65 area, but I will need some confirmations before I jump into a sell. Why is that? We are still within a demand zone, and it is not reasonable to sell within a demand zone except we see a significant sign that sellers are building momentum. Now, let's scale down into the 1 hour time frame to see how the market participants in this environment have started this week. Now, zooming into the first 8 hours of the week right here. So I'll zoom right into the current structure. So we see here that's a $65 level. Price action has broken above that structure, as you can see here. And initially, for the first 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 hours of the week, price was more or less confined within the $65.26 level and the $64.80 area. And you know how we use our range bound structures here in this community. We wait patiently, we wait for price to give us a signal, which usually comes in the form of either price breaking out the resistance line to give us an opportunity to buy, or breaking down the support line to give us an opportunity to sell. And for the fact that price remains above that key level at the $65 area, I was willing to place a buy, and that was the reason behind the buy position you see on your screen at the moment. So I'm hopeful that the momentum will continue. Looking at the fact that the $65 area continue to be a barrier for sellers. So if you would like to join me on this buy position, you're very much welcome on board. Let's see how far this bullish momentum is going to go. Now, if I am going to consider selling at all, definitely price must break down the key level, and of course I must see this area broken and retested, giving me confirmations that sellers are building momentum before I want to join a sell. And if we join a sell, we have to be very wary of that $64 area, which we marked out on the 4 hours time frame. Remember, that was a support line, and between this area and this area, we're talking about 80 pips. So if price gets close to the 64, it is important that we move all stop losses and secure the sell position. But in the meantime, I still hold on to a buy since price remains above both the key level at the $65 area and that resistance line at the $65.26 level. So I wish us all the best of luck on the US crude oil. And I also want to emphasize here that as soon as price move about 35 pips in our favor, let's ensure that we move stop losses and secure the current positions. Then what are the things to expect for this week that will be driving the US crude oil? So we are looking at the US-China trade talks, which is going to be happening in Stockholm. Any potential extension of tariff truce could further lift oil demand outlook. So please take note of that one. I'm not sure which day the meeting is going to happen, but I will find out and I'll let you know on Wednesday. And then we're also going to be monitoring the OPEC Plus supply commentary. So any shift or supply or surprise on output policy can shake price direction as well. Then there is also global optimism over easing trade tension, which may continue to support risk assets, including the oil commodity. So please, let's take note of that one too as well. I wish us all the best of luck on the crude oil. If you have any questions, feel free to let me know in the comment section. So I'll take about 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. So in the absence of no questions, I want to assume that we are all on the same page, right? So it's nothing that difficult right now. We have a simple structure on the chart, a simple range bound structure where we are capitalizing on the breakout of that resistance line to hold on to a bullish bias. And I did went on to say that the only condition that will make us sell is for that support line to be broken and retested for confirmation's sake before we jump into a sell. So let's see how far this momentum is going to go. Will it get to as far as the resistance line we identified on the 4 hours time frame, which is the $68 area? Let's see how far that is going to go. So with that said, I wish us all the best of luck on the US crude oil. So moving on to the next asset on our watch list. So the next asset we are looking at this morning is the USDJPY, and of course the dollar at the moment is very strong. Yen continues to stay very weak, but big central bank decisions lie ahead of us this week. We are looking forward to the Fed's interest rate decision coming in on, is it not Wednesday? Yes, on Wednesday. And we also have the Bank of Japan's interest rate decision coming up on Thursday. And both of them are expected to maintain the current interest rate at 4.5% and 0.5% respectively. So a lot is on the table for this week. And if we look at the differential in the interest rate, it appears that everything is in favor of the US dollar. And besides that, the US dollar has shown some very strong figures. Sorry, the US economy has shown some very strong figures in the last couple of weeks. We talked about the jobless claim count, the consumer price index, I think retail sales data as well, and we also had hawkish narrative from Fed officials saying that they will keep interest rate high for longer due to inflation concerns and a solid labor market, all of which are very good signs for the US dollar at this moment. Now, the Japanese yen is not at the moment not very good. We have multiple factors that are putting the yen under serious pressure. We have easing inflation in Japan at the moment. From the report we saw, inflation is thinning out in Japan, which reduces any chances that the Bank of Japan will increase interest rate. Then we also have political uncertainty after the ruling party's election loss. The ruling party in Japan lost their election last week, and this has brought a little bit of uncertainty into that space right now, as investors do not know what the next government's fiscal policy is going to be like, and as a result there is a reduced bet for a near-term rate hike by the Bank of Japan as this. Though the trade deal situation between US and Japan was ended with a little bit of positivity. We had I think, was it not 25%? It was reduced 25%, I think, from 30%. I think 20%. I'm not sure. I've forgotten. I think it's 20%. But I know for sure that it was reduced from what it used to be, which was a very good signal. But it's still not enough to help the Japanese economy. So for me, I still think that the Japan's economy, the Japanese yen is not likely going to be doing very well. So the path of least resistance at this moment, I think, remains to the upside. Now, looking at the chart from a technical standpoint, this was what I was able to come up with. I didn't go too far. I just captured the last 2 weeks, I think. Yes, the last 2 weeks. And from the last 2 weeks, I can see that price action evolved into a descending channel, right? When we connect the series of lower highs, this is the resistant line right here. And when we connect the series of lower lows, we have the support line right here. And as at the end of last week, we saw price close exactly around the resistant line of that descending channel, making it a sweet spot to look out for new trading opportunities this week. So one of two things could happen from here. Price could respect the resistant line and drop back into the support line, or break out of the resistant line to incite another wave of bullish momentum. And to help me navigate the structure, I had my key level for this week at the 147.800 area. And look at how that level had played a significant role in determining the direction of price action in the last 2 weeks. It had served as a support line at some point, as you can see here during the mid-month of July. As you can see, then at some point last week, it served as a resistant line as we saw the US dollar did a pullback, which could be attributed to profit-taking activities ahead of this week. Now, with the situation we have right now, the week has started on a strong bullish note as we saw price break out both the key level at the 147.8 and the resistant line of that descending channel, making it a potential platform for new highs. Now, unfortunately for me, I missed out on this bullish move. This whole momentum happened during the later part of the Asian session, so I did miss out on it. Sorry about that. Okay, so I did miss out on that buy position, and if you in any way had capitalized on it, well done, kudos to you. But for me at the moment, I have no other choice than to wait patiently for a new structure to emerge. And one of the structures I'm looking forward to is to see price maybe come back, retest the structure. This could take quite a long time. It could take 3 days or even a week before that happens. So I will continue to monitor and see if that will likely happen. If it does, we're looking forward to that buy pressure here to continue the uptrend move. Then the other scenario, which I'm also looking at, which may not take too long, is the possibility of an uptrend continuation pattern on a much more lower time frame. Maybe like a pennant structure, a flag pattern, bullish rectangle pattern around this area. Then I join that uptrend move from there. So those are the things I'm going to be looking at for this week. Now let's scale down into the 1 hour time frame. Let's see what is going on this week and how this bullish momentum started. Can you guys please hold on for me? I want to attend to something and I will be right back shortly. Please stay tuned in. All right, sorry about that break. We had some power outage here, and my inverter was not able to charge enough due to the cloudy skies here. So I had to switch to the lesser one, but it will not be able to pick up my major equipment here. So pardon me, the screen might look a little bit smaller than what it used to be because I've moved from my major screen to the smaller one. So please bear with me on that one. So where were we? We were talking about the technical details on the 1 hour time frame, right? And of course, we want to look at how the market had played out before that massive engulfing bullish candle sprang out of that structure. So as you can see here on the 1 hour time frame, which is our execution time frame, of course, you will see that the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 hours of this of the beginning of this week was more or less a consolidation phase, right? And then you know how we treat our range bound structures here. We wait patiently for price action to either break out of the resistance line for buying ideas or break down the support line for selling ideas. And for those of you who are watching from the Asian session, you might have taken advantage of this. We saw a breakout retest happen here about 2-3 hours ago. Price broke out of structure. I completely missed out that opportunity. So like I said, I will wait patiently for new structures to emerge. And like I said on the 4 hours time frame, there are two things I'm looking out for. First of all, price may likely come back, retest the structure, giving us another second chance to join that uptrend scenario. That is one. And the second one is if price will do an uptrend continuation pattern like a pennant flag pattern, bullish rectangle, whichever case it may be. The breakout of the structure will be all we need to confirm the uptrend continuation. So what we are going to be doing now is for us to capture that potential, that is that uptrend continuation pattern, if it happens, is to scale down to a much more lower time frame. And I usually prefer to do it on the 15 minutes time frame. Now, scaling down into the 15 minutes time frame, what can we see here? Can we see a consolidation? Can we see a pattern to work with? I think we do. We have something around the 148.350. Let's mark that out quickly. 148.350, right? Hold on a second. Let's do 148.350, right? And then we have a support line here at 148.150. So we have about 0.200 range bound structure to work with on the 15 minutes time frame, and it appears we have a breakout of the structure, right? So let me just place a buy right away on the USDJPY. So I'm placing a buy right away and hopeful that the momentum will continue. Stop loss will be right below the support line of the range bound structure. So I think it's a reasonable risk for me worth taking at this point in time. So let's see how the market is going to play out. So we just established a buy position above the 148.350. Now, how did we get to this point? I told you earlier, we are looking for two options. Either price comes back to retest the major structure that was broken on the 4 hours time frame, or we look out for an uptrend continuation pattern, which appears to be emerging here on the 15 minutes time frame. So let's be hopeful that this momentum will continue, and if it doesn't and price takes us out of the position in the loss, then we will have to wait for price to retrace back into structure for that retest to happen before jumping into the next leg of bullish momentum. So that is basically what we are doing right now on the USDJPY. And if anything new comes up as I continue to monitor price action today, I will definitely update us on my Telegram platform. So there you have it, what I'm looking at on the USDJPY. If you have any questions or you need some clarifications, feel free to let me know in the comment section. So I will take about 5-10 seconds off as always to see if there are any questions before moving on to the final asset on our watch list. Stay tuned in. All right. So I guess we are all on the same page, right? We've come down to the 15 minutes time frame. We've identified a range bound structure, which we are waiting for the validation of an uptrend continuation pattern at the breakout retest of that resistance line. And like I said, I already have a buy position running. And if you are willing to join me on this journey, you are welcome on board as well. So let's see how the market will play out. Stop losses right below the rest support line at the 148.150, giving enough room for price action to move around. So I wish us all the best of luck on the USDJPY. So we move right into the final asset on our watch list for today. Stay tuned in. So the final asset on our watch list is the XAUUSD, popularly known as the gold commodity. And first of all, I will not be able to continue with my camera on. The smaller inverter isn't powered enough to carry the major gadgets I'm using here, so I had to reduce the load on it That is why you will not be seeing my screen, my face again. Okay, so I guess we just have to continue with this. We only have one more left, and let's run through quickly and see how the gold commodity is doing. So I wouldn't be going into the higher time frame. I already done this before. I shared my outlook on the gold commodity during the weekend. I shared it on all my platform, and I'm very sure you must have watched it. But if you haven't, I suggest you go ahead and watch it so you can have a background knowledge of how we got to the point we have right now. So what you're seeing on my screen is the 1 hour time frame, our execution time frame of the XAUUSD, and we have a new setup right above that ascending trend line we spotted in my last video on the gold commodity. And for those of you who are with me on my TradingView Telegram platform, and of course right here on my YouTube, you must have seen this update this morning. I updated us this morning with this new structure, as it will be guiding my trading decisions today. And as it is right now, since the new week began, it is quite obvious that the gold commodity is in a tight range, as market participants are looking. There is a heavy anticipation as market is waiting for clarity into what the next direction is going to be like. And of course, we went on to talk about the major event that we are looking forward to this week. Let me reduce the screen. I'm using a smaller screen right now. We're looking forward to a bunch of high impactful events, such as the FOMC interest rate decision coming up on Wednesday. And of course, all eyes is going to be on the Fed chairman's comment for clues on the Fed's rate path. And then we also have the US economic data releases, like the job reports in the form of the NFP, initial jobless claim count, ADP employment change, and of course the average hourly earnings. Then we have inflation figures like the core PCE, personal consumption expenditure, which is coming up on Thursday. The core PCE is generally known to be the Fed's favorite interest rate indicator. Inflation indicator. So we're looking forward to that one too. And then we also have consumer spending figures coming up much more later in the week. So these are very, very important events that will be influencing the sentiment in this market. And as a result of this, we can say the market has been consolidating, as we can see extended sideways trading activity as price remains confined within the 3,344 and the 3,325, which is our key level for this week. Now, with this simple structure we have here, we have no other choice than to exercise patience and wait for price to either break out of the resistant line of this range bound to give us an opportunity to buy, or break down the support line of this range bound structure to give us an opportunity to sell. And you might be asking, but I have a buy position running on gold. Yes, I do. I captured this move on the 5 minutes time frame before I updated us this morning, and after the updates, before the updates, I didn't have that clear structure yet. But with what we have right now, it is reasonable that we place a buy stop order above the resistant line, which I'm going to be doing right away, above the 3,344. I've just done that. You'll see that at the bottom of your screen. I just placed a buy stop order above that area. Now, the only condition that will make us sell is for the 3,325 to be broken to the downside. And interesting enough, that's key level also shares a confluence with that ascending trend line we spotted on the 4 hours time frame. Remember, it's the support line of the ascending channel. If price can break down that structure, we may likely see a massive move to the downside. So let's see how the market will play out around the gold commodity. We have a simple structure here. Let's wait patiently for this structure to mature before we jump into any positions. So there you have it, my perspective to the gold commodity. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take another 5-10 seconds off. Let's see if there are any questions or you need some clarifications. Feel free to let me know, and then we come back to round off on today's Forex Morning Mastery. Stay tuned in. All right. So in the absence of none, I guess we have come to the end of today's Forex Morning Mastery. I hope you all found this session insightful and useful in your decision making for today. I see you, Jonah Aruna. You're very much welcome. And we were able to run through the 3 instruments I am monitoring for this week, which includes the US crude oil, the USDJPY, and of course my favorite, that is the XAUUSD. And one interesting thing about today is that we have simple trading setups to look out for, nothing complicated at all. The structures we've identified on our chart reflects the current market sentiment in this respective market we are talking about. So all we just need to do right now is exercise patience, and let's wait for the structures to mature before jumping into the trades. And always remember that every decision we make in the financial market is more or less an educated guess until price hits your TP target. So with this understanding in mind, let's ensure that we have a well-defined risk management strategy in place. And this must also be consistent with all of the trades we are taking. And with that, I guess we will be on the safe side of our portfolio. So, and for those who are joining us for the first time, I do hope you gained a lot from the session. If you did, why not join us in our subsequent editions? Trust me, the more time you spend with us, the better you get to comprehend my analytical approach. So I look forward to seeing you again, same time on Wednesday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have done and of course prepare ourselves for the second half of the week. And you know what? The second half is going to be very volatile. We are going to be seeing enough liquidity in the market. Prices are going to be moving very, very fast due to those major events we talked about earlier. They are all coming in the second half of the week. Fed interest rate decision, the Bank of Japan's interest rate decision, the ADP employment, NFP, tariff deadline, all of them are coming in on during the second half of the week. So it's a moment we need to come together again to see how we can strategically position ourselves for the next move. So it's on this note, I would like to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful, wonderful evening, everyone. Bye.